RBI's internal working group committee has recommended several things on private bank ownership. Uh, One among them is increasing the ownership to 26% for promoters and 15% for non-promoters. But two important things there that the internal working group committee has recommended is that giving license to industrial houses, large industrial houses, that is something that the RBI never entertained before, and also cutting down on the time period. I mean, RBI has given payment bank licenses to these industrial houses earlier. Now they are saying that you can run for 3 years before applying for scheduled commercial banking license. It was earlier 5 years. So basically, former Governor Raghuram Rajan and Deputy Governor Viral Acharya uh, came up with a strong criticism of this recommendation by the internal working group. One thing to be kept in mind is that this is not RBI's recommendation. This is an internal working group recommendation. RBI will come up with its norms in January 2021. So there is some time before RBI ponders over this, take feedback of everyone, and comes up with its own recommendations. So, as far concerns and points raised by Rajan and Viral Acharya in their joint statement, the primary issue is that corporate houses should not be given bank licenses because, first of all, in India, banks are not not only in India but in most other countries, banks are not allowed to fail. They are bailed out. For example, RBI bailed out Lakshmi Vilas Bank recently and Yes Bank. Uh, However, if a corporate floats a bank and it goes down, then bailing out will be a very costly proposition for the exchequer. But the most important point here is that a corporate can self lend after floating a bank. So, because banks are not allowed to fail, public put their deposits, huge amount of deposits in banks. And if a corporate is floating that bank, that corporate can easily, take out the deposits as loans. I mean, they can basically lend to themselves. And even if it is not direct lending, it is very difficult to establish link of group lending. There are several subsidiaries, they can always take the money through other subsidiaries. So Rajan and Acharya basically are against this. They said that in their joint statement in LinkedIn, they said that why now, why are you suddenly coming up with this kind of recommendations and with this kind of committee report. Committees are not formed out of the blue. So why now they are raising this question. uh, so their concerns are basically that this will raise crony capitalism. This will concentrate economic power in few entities, and in extension to that, that will give rise to political powers, concentrate political powers into these entities. RBI for now is able to do fit and proper, and give banking license to who they think deserve the banking license. But who knows, going forward, they could be under political pressure. Their RBI's board could be compromised. It is possible. And then the corporates can get licenses as they wish, and then it's a very risky scenario. That's what Dr. Rajan and Dr. Viral Acharya has warned about. Another point they have raised objection to is that this payment bank thing. Why are you in such a hurry that you are recommending that you don't need to uh, hold 5 years of license, 5 years of practice as payments bank. Instead, you can just have 3 years of payment bank experience before you can apply for scheduled commercial bank. Well, why such hurry? Another critical point that Dr. Rajan and Dr. Acharya have raised is that the committee consulted experts, all except one, suggested that industrial houses should not be given banking license. Yet, the committee comes ahead and recommends giving license to industrial houses. So obviously, the former RBI top officials were very surprised with this. They raised the question, why did this happen? I mean, you have consulted all experts; they have said no, and yet you come and recommend saying that yeah, license can be given. The committee has also suggested that license to industrial houses can be given, but there should be necessary amendment of RBI Act. Now, Dr. Rajan and Dr. Acharya are saying that if laws are enough to stop all these malpractices, given, I mean, if a corporate is given a banking license, then the law could have easily stopped NPA accumulation. The law could not stop that. How can you stop a corporate from misusing or mislending to its own group entities? So yeah, these are the basic points. Globally, this kind of experiments have turned out to be disastrous. So it should not be. It should be. It's a bombshell that should be kept on the shelf. Their concerns are material, of course, and RBI has so far desisted from giving license to corporate houses. Uh, Dr. Rajan and Dr. Acharya's point of view have been supported by many. Uh, S&P has also come out with a statement saying that this is not the right approach. Uh, um, and also, Dr. Acharya and Dr. Rajan also suggested that the right approach is that continue with what you have done, give the banking license to financial firms that have very minimum non-financial operations, and they bring expertise also, and the bank can be well run in that case. And if you are really concerned about corporate governance and management practices in public sector banks, why not first reform that? Why not first reform the governance of the public sector banks? Why not list it and sell it the equity to the public instead of selling it to the corporate houses? That is also a very bad idea as per the duo. Well, how will things change for the sector if RBI's proposals are to be with respect to corporate ownership, or ownership is accepted? Uh, First of all, this is an internal working group recommendation. This is not RBI rules. There is a huge difference between these two. Uh, Ownership, of course, ownership can technically go up to 26%. That there has been so much of lobbying around that, and there are some merits and demerits on that. But experts are saying that giving license to um, large corporates for floating banks, may not be the best of ideas. Same as what Dr. Rajan and Dr. Acharya have written in their LinkedIn post. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.